All right, we are going to hit the critical question when you've decided you want to self-direct your retirement account, when you're like, I'm going to use my IRA or 401k to buy real estate, a private company, to lend money, any of those things. I want to go over the structures and strategies that are most commonly used. Do I use a self-directed IRA? Do I do the IRA LLC, sometimes called the checkbook IRA, or I do the solo K? What works for me? What structure and strategy should I use when self-directing my retirement account? You're going to have those three options: self-directed IRA account, IRA LLC, sometimes called checkbook IRA, or doing a solo 401k. I'm going to walk through each one of those separately here, and then we're going to compare them all so you know which one is right for you. All right, let's start with the self-directed IRA. This is the most common one. It's the easiest. It's the cheapest to set up. It takes a self-directed IRA account at a company that lets you self-direct, that'll let your IRA buy real estate, do a private money loan, invest in a private real estate fund, invest in an LLC. All these things are things a self-directed IRA account can do. Now, let's say you want to do a private money loan. You're like, Matt, I got a friend who's a real estate investor. They want me to lend them $100,000. I got my 401k over at Fidelity. Fidelity won't let me do it. So I'm going to roll it over to you guys at Directed IRA, put it in your self-directed IRA account that you have at Directed IRA, and then I'm going to lend the money to my real estate investor friend. They're going to put a lien on the property, and I'm going to get paid back interest and points. Perfect. I just use a self-directed IRA for that. That's a perfect example of someone who should just use the self-directed IRA. Maybe the loan gets paid back in a year, 6 months, maybe it's a longer term loan, doesn't matter. What's involved there is you're going to move the account from Fidelity to Directed IRA, or wherever your account's currently at that doesn't let you self-direct. You get to a self-directed provider like us, Directed IRA. There's no fees to transfer, no penalty, but we're going to let you invest in the things you want. We're going to let you do real estate or private companies or crypto, whatever you're into. So now I'm lending the money from my IRA to my investor friend or whoever it is that I'm out making the loan to. Now the interest and income goes back into the IRA. It's building up. It's getting better interest than I might have been getting in the mutual fund over at crappy mutual fund investment I had at my prior retirement account. So that's the self-directed IRA. It works great for private money loans. It also works good if you're going to invest in a syndication. Maybe you're like, Matt, I'm going to invest in this LLC or limited partnership. It owns an apartment building or someone's raising capital. I'm going to put $50,000 into it. Great. Use a self-directed IRA. Do those all the time. Again, you move your account from your current provider, TD Ameritrade, Vanguard, Fidelity, whoever. But where you call them and they're like, hey, I want to invest in a private real estate syndication. They're like, you can't do that. No, you can't do that at Fidelity or Vanguard or TD Ameritrade. You're just going to need to move the IRA account or old 401k, old employer 401k over to a self-directed IRA. Again, at the number one company, Directed IRA. But now we're going to say, great, we're going to invest this money, $50,000 or whatever the amount you're designating, into the private syndication. Don't need an LLC for this. Don't need the solo K structure for it. It's simple. It's straightforward. Your retirement account is owning units in that private fund. When there's distributions, they're going to come into your IRA account and grow. When the asset sells there, they're going to send all the final distributions down to the self-directed IRA account. So those investments are not relatively transaction heavy. You're not, paying for remodel repairs. You're not dealing with tenants in this scenario. None of that's involved. You just need an IRA as an account that can make the investment in the deal. There's some other investor doing the rehab on the property. You're just the money guy. There's some other syndicator running this apartment building deal. You're just one partner throwing in some cash. You don't need to get complicated by setting up an LLC or doing a solo K. Those things can be great, and there's many instances where you're going to want to use those structures I'm going to touch on in a second, but they cost more, all right? So over here, your fees maybe, like our fee right now is $295, annual fee for an account, $50 to set it up for a self-directed IRA, and then $50 when you make an investment purchase or sell. So that's the fees. It's much less fee intensive, simple. Get the money in, get it invested, let the money come back in as there's cash flow or interest income or an asset sells, and you're not really running a deal, property, or a rehab. All right, now let's talk about the IRA LLC. Now the IRA LLC, rather than my IRA, let's say making the loan, or maybe I want to buy a rental property, my IRA now is going to own an LLC 100%. The LLC in turn is going to own the property, or is going to do the private money loan, or is going to hold a multitude of investments. The LLC here is like the holding company in the middle. What's nice about the LLC though is it's going to have a bank checking account. You're in control of it. See, when you have an IRA, that has to be with a custodian. And in the self-directed IRA example, we're the custodian, directed IRA, and there's other companies that do this, but you only need to know the number one. So you got your IRA at self-directed IRA. It will let you self-direct it, but what's going to happen is you're going to tell us, hey, Matt, invest this money in XYZ LLC. Hey, Matt, send this money to ABC Investor LLC that's doing this rehab. And here's the note and just here's the wiring instructions. And we send it for you, okay? But you got to talk to us. You got to authorize us. You got to send in a form, okay? And that takes some work, but for those investments, that's not a lot of work. It's easy. We take care of it for you. You know, you're authorizing us, and we go send the money, make the investment based on your instruction. But let's say you want to do a rental, or you want to rehab a property where you want to own it yourself. You don't want to be calling us to pay every contractor payment. You don't want to be calling us, particularly if it's a short-term rental that your IRA owns. It could be a lot of work. Now, maybe you have a property manager you could put in the middle, and that can work with a self-directed IRA. But a lot of people like an LLC because they'll have their IRA own an LLC 100%. The LLC, in turn, owns the investment asset. Let's do the rental property. Now, when I go buy the rental property, I got my IRA over at Fidelity. Let's say I'm going to move it over to Directed IRA. And I got my IRA account at Directed IRA. But now my IRA at Directed IRA is going to open an LLC called XYZ Investments LLC, whatever you want to call it. You get to be the manager of the LLC. The LLC is going to have a bank checking account. And there's banks that set up these checking accounts. We can help get you one that's familiar with these types of LLC business checking accounts. We're going to send the money to that LLC business checking account. Since you're the manager of the LLC, you'll have authority on the checking account. You can have a debit card too. Now you're cutting the checks. You want to buy the property. The buyer of the property is XYZ Investments LLC, and you're cutting the check for the down payment and wiring the funds in from the LLC business checking account to buy it. You want to make 10 private money loans, and you got a big chunk of money here in the LLC? Great. You can make all the loans out of this LLC, and you can control them. You can do collections on it. Maybe you're doing non-performing notes. You're buying at discount. Maybe you're just originating new notes, but you're doing a lot of them, so you want the benefit of an LLC. Maybe you're wanting to buy multiple assets, and you're like, I just want to take control of it, have 100% control with the LLC. I want the checkbook. Some people call it a checkbook control IRA, but this is how it works. You get to be manager. You have authority on the checking account. Now remember, you do not own the LLC. You never take money from the LLC. You never put money into the LLC. Your IRA owns the LLC. So if you want to take money from the LLC, you got to send it back to the IRA, and then you take a distribution from the IRA. If you want to put more money into the LLC, let's say you want to transfer more money over from your Fidelity or TD Ameritrade account, or you're making a new $6,000, $6,500 contribution, okay, let's go to the IRA first, and then we'll invest more money from your IRA into your IRA-owned LLC. So the LLC is kind of in the middle here, providing convenience. There's also some asset protection benefits. If something goes bad on the deals, you get some liability protection as the manager of the LLC where you can't be sued. But the LLC is a tool of convenience. It puts you in control. You don't have to talk to your IRA custodian as much. I mean, we love you and want to talk to you, but sometimes you want to just go and do, right? You don't have to call us or submit a form. Now, we'll be involved on the front end because you do still have to have the IRA account, and we're going to get the transfer, rollover, or new contributions. But on our account, with us, it's going to say your IRA owns XYZ Investments LLC. XYZ Investments LLC may go out and do 20 different things. I mean, it might just do one, whatever. That's what the LLC is doing. We're just looking at your IRA owns the LLC. So you're in control here. The IRA LLC is a great structure. I use the IRA LLC structure myself for my rental properties that my IRA owns. I also do some private lending out of it as well. I just like having it in an LLC, even though me, Mat Sorensen's in the office and I don't know what forms to do and what buttons to push and what person to tell to do something. I just like having the LLC. Sometimes it's a little easier because I'm doing some of those short-term money things, and I've had rental properties and stuff where it's just easier for me to control it, deal with tenants. I had a rehab too, so it just was easier as a rehab on a rental property. I didn't go to rehab, guys. I had a property rehabbed. Okay. Just want to clarify that. All right. So the next option, solo K. Now I'm going to come back and compare and contrast this. It's like, Matt, you're going super fast. Guys, I'm just breaking it down. I got a whole chapter in my book on each one of these subjects. I've got other videos breaking down each of these podcast episodes that go into detail on each little strategy here I'm talking about between the three. But I just want to lay them out fast, and we're going to come back and contrast. Now, the last option, solo 401k. Where a solo 401k is a tricky one. The reason it's tricky is it only works if you're self-employed with no employees. Let me repeat that. Self-employed, no employees. Now, let me tell you what self-employment is. You have a real business, or you're starting a brand new business, or you're selling goods or services. I'm not talking about your rental LLC with rental properties. That's not a business. That's a business for real estate purposes and for tax write-offs, but for retirement account purposes, that type of rental income, or even, let's say you do private money lending personally, that's interest income. So what we want instead is we want business income that is coming from selling goods or services. So you're a consultant, you're a real estate agent, you're a lawyer, doctor, dentist, whatever. You have an eBay store. I don't care. You drive Uber, okay? That's selling goods and services. You're self-employed. So it's on Schedule C on your personal tax return. Maybe you have an S corporation or an LLC. Now, if you have that, you're self-employed, and so long as you have no other employees other than business partners, spouse, and certain family, but as long as you have no other third-party employees, you can do what's called a solo 401k. And the solo 401k was designed for individual business owners where it's just themselves. That's why it's called a solo 401k. Now, we know about 401ks if I work at Big Corporate America, or maybe I work at Dunder Mifflin, and every employee there has their account in the Dunder Mifflin 401k. But the reason the solo K is cool is because it's just for you, the business owner. You can control it. You can self-direct it directly. If you have the right type of plan, we'd have a self-directed solo 401k plan here at Directed. And that solo 401k, you can put up to $66,000 a year into it. So for those of you that are looking to get a lot of new money into retirement accounts that are self-employed, because you never had the big corporate 401k where the company did all this matching, it's all been up to you. You self-employed people, the solo K is awesome. That's why Congress created this. Let you save for your own retirement as a self-employed person. Now, some of you may have heard of a SEP IRA. Those are okay, and self-employed people can use it, but the solo K is better because you can get more money in on less income. So the solo 401k is cool because I can get more money in. I can have a bank account in the solo K without an LLC. I can just have a bank checking account right in the solo K's name if I wanted. I can do Roth money and traditional money in the solo K. I can roll over traditional IRA or old employer 401k dollars into the solo K, just like I can do back with an IRA. But the solo K is nice for those self-employed. So if you are self-employed with no employees, even if you got a day job somewhere, but you got a side hustle, and even if that day job has a 401k and you have a side hustle, again, selling goods or services, that side hustle can justify setting up a solo 401k. All right, so now I got the solo 401k. I roll over my old retirement account funds, maybe I make a new contribution. Again, you can put up to $66,000 a year. If you have a spouse and your spouse works in the business, they can put in $66,000 a year. This is the 2023 numbers. Now you're doing like $120,000 plus into your solo 401k a year. Now you'd have an account and your spouse would have an account. So if this is just you, then you'll just have one account. Now, if you did Roth and traditional dollars, you end up having a Roth account and a traditional account. So, but the solo K is a structure and strategy for those self-employed. It's a 401k plan for you. You can put a lot of money into it. You can self-direct it, and you can have a bank checking account right in the solo K itself. And again, we got the banks and stuff that you can work with that'll establish these checking accounts and know what the heck you have. So now if you're looking at the three options there, I want to walk through them again and tell you who should use which one. If you're a self-employed person with no employees and you want to get more money in your retirement account, do a solo K. Just do a solo K. It's going to be the best option. You can put more money into it every year than you can IRAs. New contributions in an IRA, you can only put in $6,000, $6,500 starting in 2023. So I'm not loving that for new contributions. But again, self-employed, I get the solo K, I can have checkbook control right out of it, and I can max out contributions. There's other cool things you can do on a solo K. It's exempt from a tax called UDFI, which is when you leverage assets with debt for real estate. And you can also do 401k loans where you can loan yourself money from the 401k. And that's a cool structure because you can loan yourself money from the 401k not to exceed 50 grand or half the balance of the 401k. But that loan you can take to yourself and use for business purposes, pay off high interest debt. Just a little couple bells and whistles in a solo K. Again, a lot more content I have on that. But just when you're picking which lane to start going down, solo K, self-employed, no employees. If you're not self-employed with no employees, and I should say no other employees, just skip solo K. Don't even think about it. You're focusing on self-directed IRA or IRA LLC. Now, self-directed IRA, I mentioned earlier, I like when your asset doesn't have a lot of stuff going on where you need to be involved, like the private money loan, where you're just making maybe one loan at a time, or maybe you're investing in a syndication deal. In those instances, we like to just have self-directed IRA. It's easy. You don't have the cost of an LLC, which, by the way, is $800 to $1,000, depending on the structure of it. So self-directed IRA, private money loan, syndication, investment where there's not a lot of involvement where you're going to go back and forth with your custodian. IRA LLC is great when the investment is more transactionally heavy. Think of you're rehabbing a property. You're doing a lot of short-term money loans. You have a bunch of rentals or even just one rental and there's just tenants and stuff. You don't have a property manager, or even if you have a property manager and you just want to simplify it by having more control of using the LLC. Maybe you want to have 10 different assets going. The LLC is easy. It consolidates. It makes it more simple for you to manage it by using the LLC's bank checking account. So, or maybe you've got some risky investments in terms of liability. You're doing meth lab rentals. I don't know. You're like, I'm just worried about getting sued. I like this LLC, limited liability protection for me and for my IRA. So you may want to think of the LLC just for some asset protection benefits for, let's say, a rental property rehab, or just, again, you're doing a lot of private money loans. So that's IRA LLC. So I hope that helps you figure out which lane to start going down when you're deciding which strategy and structure you're going to use to self-direct your IRA. Now, make sure you go subscribe. I have a YouTube channel. If you're watching this on here, please subscribe. I've got my book, the Self Directed IRA Handbook. It's the #1 book on self-directed IRAs. A lot of my competitors in the industry, the National Association in my industry, uses my book to train people and certify them in the industry. I've sold 40,000 copies of it. It's a pretty good book. If you want to learn about self-directed IRAs, get that book. If you have zero interest in it, don't waste your time. You'll hate it. And also, I just want to say, too, get over to Directed IRA. At directedira.com, we have a lot of resources. We have a podcast. We have webinars. I have full hour-long content on each one of these different structures and strategies on how you can learn about self-directing. And also get over to matsorensen.com. Again, there's more resources there. I've got a self-directed IRA investor toolkit that's free. You can sign up for there, and that'll help you learn how to take control of your retirement. Thanks. Okie dokie.